Until now, Indian markets have been seen as an anti-AI trade. I mean, not very positive kind of a connotation, but we were seen as anti-AI trade. And I do observe when I see a lot of these reports these days, people have nicely moved it from anti-AI to India being an AI hedge and giving it a very positive kind of a connotation. So therefore, does it mean that the meltdown that we're seeing in say markets like Korea, for example, all those leverage structures and all of them getting unwound, is India reasonably cushioned? Therefore, when I say India, I mean Indian equities reasonably cushioned from this kind of a meltdown, because we never partied, we never joined the party when it was going higher. So to that extent, can India expect to be better off? Indian equities, can we expect to be better off?
See, I think I would look at it like the market seemed to be kind of saying that it's a hedge kind of a trade. It's also, in a way, just like we do sector rotation as a strategy, I think investors are also rotating.
Clearly.
So, and the money goes where the earnings are.
Yeah, it was China, then this, and in India.
Yeah, because just look back 2 years ago and see where the earnings for Indian markets have been. Last 2 years, earnings have been in the vicinity of about 6 to 8% for India.
Correct.
Per annum, whereas how the earnings have been
90
in Korea
and 100 and
300 and all those crazy numbers. And even now, I think what seems to be the case is that this whole memory chip shortage and all of that will persist until at least end of 2027. Of course, that's premised on how the
AI build-out is expected
the AI
to happen.
build-out happens. But nevertheless, that's what seems to be the case. So this has got another 18 months to kind of, legs to go over there. So I think markets are very rational in the way they are looking at it. Mm-hmm. So I think they are just moving monies where the earnings are seen. Now, it is now really up to Indian equities to actually stump up those earnings.
Correct.
And I think that is really what we are seeing right now. Last couple of quarters, you first saw the December quarter throw up 15% kind of earnings. After about 8 quarters, I think that was the first quarter where we saw double-digit earnings. March also showed 15% earnings. Now June numbers, while of course it's only 500, 600 companies, but as of now it looks like we are tracking roughly about 18% kind of growth, which is a fairly good growth. And I think investors also realize that the Indian growth, the EPS growth, is qualitatively probably different, because in certain other markets you get growth only in specific areas.
Pockets, correct.
Whereas in India you are seeing very, very broad-based growth, and therefore qualitatively probably it's better, and that's probably what is kind of turning at the margin right now.